Is FOMC interest rate announcement in the upcoming week going to break the golden silence? Let's dive deep into the charts to find out if gold is going to get bullish or bearish. So here's the chart on our screen for DXY, that's dollar index. And based on a line chart, let me just remove this fib extension from my screen. So here what I've done, if you notice, it's high, then lower high, then we have another lower high, and then a higher high. So it's a double top here followed by lower high and lower high. So this is the most important high which is required to be broken if dollar index wants to go ahead upwards. So this is not yet done, so we are still below this level. Apart from that, I've marked a rectangular box here, and this box is basically the identification of the high volume zone. So right now the current DXY level is below the previous high and it's inside the high volume zone. So that's it. If we need, if the buyers of DXY or the bulls of DXY, they want to take it higher, they have to break this level. Moving to 4H, the pattern says we can have still one more push to the upside. So here we have first push up, consolidation, second push up, consolidation. And I believe on 31st of Jan we have FOMC interest rate announcement, and as per the estimates, the interest rates will remain same, but the tone of the FOMC members would be hawkish, so it can push DXY further to the next level of resistance, which is somewhere around this area. Precisely as per numbers, it should be around 104 to 104.5. If the buyers, they break this level, the resistance should be broken, then we can expect further continuation to the upside, or we can expect that dollar should start rolling downwards from this level. So that's it for dollar index. Okay, so now the next instrument is CHFJPY, and here right now I'm on a 3-monthly chart. I want to see the longer term scenario here. So based on the 3-monthly chart, we have higher high, and now the price is marching up without any signs of slowdown on the 3-monthly chart. So long-term scenario remains bullish for CHFJPY. Currently, as per the fib extension levels or the magnet zones, it has crossed FE200 and FE2.618, and the next upcoming level is 181.97. so if it continues in the upward direction, the next target would be 181.97, or we can just round it off to 182. Now let's go back to the lower time frame charts. So we'll go back to weekly. Based on weekly, if you notice, I have marked again a high volume zone area with this blue rectangular box, and it has taken support at this high volume zone area. So if it breaks below 163 with a weekly closing basis, then only we can change our point of view to bearish. Otherwise it remains buy on the dip. Moving further down to daily, here again I have marked on the daily basis. So now I have taken into account the high volume zone starting from this low to the recent high, and we got another high volume zone on the daily time frame, which is exactly on the round number of 170. So if on daily basis it breaks below 170, then we can expect a short-term pullback. Otherwise it will continue to the next level, that is 182. So again, it's a very long-term scenario. Current price is 171.38. 182 will take some time to be completed, but the idea remains to buy on the dips rather than selling. And fundamentally there is no change in the central bank policy of Japan, so I don't think so that JPY is getting up for some strength in the upcoming weeks or months. So if you notice on the daily chart, currently it's range bound, it's moving sideways. Once this range is broken, we can still expect some sideways behavior. Once the range is broken, you can buy on the dips. moving to 4 hourly chart now. Now, even on the 4 hourly chart, I do not see any signs against in the bullish movement. So here we have higher high on MACD histogram. Here we have higher high on MACD lines. So everything remains bullish, and the solid, super solid foundation is at 170. So any pullback during the week or in the upcoming days towards 170 or 170.5 should be taken as an invitation to buy but not to short. Now let's move to the next currency pair, that's GBPCHF. Now in the upcoming week we also have interest rate announcement from the Bank of England. Let's quickly go to the investing.com to have a look on the calendar. Click on the tools, go to economic calendar, set your filters to the most important events only, apply, and this week, the week starting on 29th of January. On Monday we do not have any special announcement coming up. Then Tuesday is again pretty dull. Wednesday we can expect, Wednesday that is 31st of Jan, Fed interest rate decision, FOMC statement, and followed by Bank of England interest rate decision on 1st of Feb. So 1st of Feb is going to be very, very crucial for pound direction. So here, starting from the weekly chart, if you notice, it's continuously printing lower highs, lower highs, lower highs. Then we have lower highs, lower highs, lower highs. So this is the last official high which is required to be broken if the buyers, they want to establish their control on this currency pair. So right now, if we apply Fib retracement starting from this high to the recent low, so currently the price got rejected precisely on Fib retracement level of 80%, and it is not only the Fib retracement level, in fact it is also the high volume zone. So right now we are getting some bearish reaction inside the high volume zone along with Fibonacci retracement level of 80%. So that's the reason I have a bearish point of view for GBPCHF in the coming days. So here we got the rejection from the high volume zone. I can see that hidden bearish divergence is forming up. We have lower high and we have a higher low on histogram, so which means hidden bearish, which again means the continuation of the sellers. Now I can also add volume profile starting from this swing low to the recent swing high, and here we got another high volume zone. So if we want to target, we can target this zone as our take profit area in the sell direction. Moving down to 4 hourly chart. On the 4 hourly chart, we can clearly see that the market is moving lower. We got rejection from this high volume zone area, and this could be the upcoming target. So if we sell at the current market price, assuming with a stop loss higher than this level, the recent high, the rejection area, and the target could be the next high volume zone area, so we are easily making 1.75. so this is how I'm expecting pound CHF to behave or move in the upcoming week. But again, trade cautiously because we have Bank of England interest rate announcement coming up on 1st of Feb. So if you are trading pound pairs, then please trade cautiously. Now the next instrument is crude oil. Crude oil looks very promising on the charts. So here we go again on the 3 monthly chart so that we can view the longer term trend here. So turning it into a line chart. So what I've done here, let's go back to the bar chart or the candle chart. So what I've done here, I've marked a line which was a major resistance and now the market has created higher high. This is during COVID or post COVID. The market broke this resistance, created a new higher high, and we were expecting a pullback. So if you see, based on the fib calculation, let's plot fib from the lowest point to the highest point on the chart. So based on fib retracement measurement, crude oil retraced back precisely to 50% area and bounced. So 50%, that is the price level of $67, and we got a solid support here. Now I've also applied high volume profile tool on the charts, and we got the high volume zone around this area, so which is somewhere in between $89 to $91.98 or $92. So we can expect the retest of this high volume zone in the coming weeks and months. Now moving back to the monthly chart. Now here, if you go back to the candlesticks, if you notice, we have bullish price action at the 50% retracement area of the long-term chart, and I can also see that there is slowdown on MACD histogram. So the sellers, they have slowed down, and right now the market is moving up. The crude oil prices are moving upwards. The first destination could be the next fib level, that is 38% level, and in terms of levels it would be somewhere around $81. So $81 is the next upcoming target, and once the buyers, they break above this level, you can anticipate the price to jump back to $89 or $90 in the coming weeks or months. Let's have a look on the weekly chart. The weekly chart looks very promising for the buyers. Here we got bullish divergence. The break of structure happened, higher high created, pullback happened, and right now we have solid bullish price action. And this is again the second high volume zone area, which is now working like support. So if you are trading crude oil, then the support is at $72 and the next target is 81. If 81 is broken, then you can aim for $89 or $90 in the coming weeks or months. So this is the plan for crude oil. And finally, let's have a look on gold's chart. I'll go back to 3-monthly chart, and based on 3-monthly chart, this is the blue box, which is again high volume zone. And if you see, in the past, the price rallied above this point, that is around 1975, 1980, but retraced back. Then it could not break. Finally, it broke again for the second time, but retraced back. Third time, broke up, retraced back. Now this is the fourth attempt, and if you see the last quarter's candle, this candle is the last quarter's candle. This is for the first time in the history that we have a candle closing above the historical resistance level. So this historical resistance level of 1980 is now finally broken by the last quarterly candle. So that's a reason which gives me a bullish idea. So in the longer run, in 2024, I'm not going to short gold. I'll be looking for the dips to buy. Now let's have a look on the lower time frame, that's weekly. Now we are going back to the same zone for the retest on the weekly chart. MACD looks quite weaker in the terms of buyers, so it's rolling back, rolling down. We are going back to retest the area of 1979 or maybe slightly deeper, that's around 1950, but any dip should be taken as an opportunity to buy. Now if we plot fib starting from the previous swing low connecting to the recent swing high, we will get the discounted levels, we will get the fib levels. So here we go with the placement of fib from the recent swing low to the recent high, and the 50% retracement. Right now we are at 38% retracement zone, and the 50% retracement is again somewhere around 1972. So any dip towards 50% or maybe slightly lower towards 61% should be taken as an opportunity to go long. Now, only on the short term basis, like if you're trading for intraday or short swings, you can look for sell trades, because right now I am expecting that dollar will complete its next high, which is towards the next lower high, which I've already shown on the charts. So in the meantime, there will be some pressure on the gold. So until dollar remains higher, there will be some short-term pressure on the gold, and I've marked low, higher low, and I've also marked high and lower high to form this triangular pattern here. Now currently the gold has broken the triangle to the downside, which is a bearish sign, but only in the short term. In the recent days, it's been quite range bound. There was no clear direction on the daily or the 4-hourly chart, but only for the short term, I'm expecting gold to dip, retest the area of 1980, 1972, or maybe 1960, and finally it should fly to the next fib extension level, which is at 2150. So this is the plan for the upcoming week. I hope it adds value, and have a profitable trading week ahead. Bye bye.